So I'm going to bring in now QI Researcher, CEO and Chief Strategist, Danielle DiMartino Booth. All right, so, I mean, your initial thoughts, right? We said two dissects. We thought it would be Bowman and Myron, but you've got someone, I guess someone still maybe more concerned about inflation than the rest of them?
That must have been a pretty lively meeting if you had people that far away on the spectrum.
Right.
Schmidt has always been very hawkish, and he's always been very concerned that inflation due to tariffs could end up taking off at some point in the future, so I completely see where he's coming from. Just the same, this is not the united front that we saw at the last meeting.
Great point. Okay, now you've been warning about softness in the labor market for some time.
Yep.
I mean, we can see month to date the spike here and the job cuts tracker. And it's not just these numbers, right? The headlines are coming, high profile companies, right?
Very
We're going to
much
just,
so.
I mean, UPS, Amazon, Intel, Accenture, Ford, these are household names and these are good paying jobs. So we know Powell's starting to hear this, but obviously it's not everyone. How much is this going to influence the rest of the year?
Oh, I think it's going to have a major influence because this is not a normal seasonal development for us to see this level of layoffs for this time of the year. And in fact, the last time we got ADP out, the only pillar of strength was the country's largest employers. And now they appear to be culling their ranks. And these are very big headlines that are really going to impact consumer confidence as well.
To your point, that report, that last ADP report, I think large were like up 500, but small, tiny, less than 20. It was disastrous. Inflation. I know you love the Trueflation index. We were climbing up a little bit here, but obviously we've plateaued. We're pulling back a little bit. How concerned should the Fed be about inflation?
So, I mean, a lot of what we're seeing in real-time inflation metrics reflects higher food prices, higher electricity prices. Thank you, data centers. Those are not the types of price pressures that the Fed can control for. So they should really be looking beneath the surface to what's pulling inflation down. That is shelter and anything discretionary. Talk to any working man and woman on the street, and they will tell you that they're right now just able to afford the essentials, but not anything discretionary if you're not in that top 10% that accounts for 50% of U.S. spending.
All right, this will be the fifth time. This is the fifth time now the Fed has cut when the market was at an all-time high. The other times the market didn't, seem to be okay. We kept continuing to rally. You're saying that at this moment, considering all the things out there, that Powell is still the most important force in the market.
I think he is at this moment, yes. And a lot of it has to do with the backdrop, Charles. You're seeing what's happening with the threat of food stamps going away and so many families suffering already. I think Powell still does have a say, but as I think another one of your guests is going to tell you, a lot of it also has to do with the mechanics of simple flows into the market. Again, something Powell has no control over. So
let's talk about the consumer for a moment. You just alluded to the consumer. On one hand, we've got rich folks, and on the other hand, we don't. So in the PayPal call yesterday, a lot got lost because of these big deals that they cut. But they're talking about the consumer are just beginning to be more selective. Their behavior continuing into October. So they're buying things, but to your point, fewer and fewer things. They're just barely making it.
Yeah, the basket's getting smaller.
Right. So that's not inflationary, though.
That is not inflationary. And that is why we're seeing one company, Kraft Heinz, one company after another is saying people are not able to afford the higher costs that we need to push through to them, by the way, which is going to come out of their margins eventually. And what does that lead to, Charles? More layoffs, because the only cost that a company can control for is labor.
So net, Wall Street wants the Fed to be accommodative. Of course, we still got the call coming up and the Q&A session in a minute. What do you think Wall Street wants to hear?
I think Wall Street wants to hear that December's a go. If the Fed is really concerned enough to stop shrinking its balance sheet, then it seriously sees the need for it to not be as tight in its stance, especially in this official data vacuum.
All right. Stick around. I need you.
Of course.
Help us decipher this Fed talk in a minute.